Today we have episode 7. In yesterday's episode, we learned about consensus, how consensus is built within the blockchain. Then we understood the consensus mechanisms. And after learning the consensus mechanisms, we learned different consensus mechanisms like proof of work, proof of stake, and now evolving different consensus mechanisms in future. After understanding consensus, we need to understand, and it is very essential for everybody to understand how digital assets have real value. If there is a consensus, if there is a consent, if there is a common consensus, then there must be real value for it. If there is no real value, then nothing makes sense. Today we are going to learn not into detail, but yes, in a very smart way, how and why digital assets have real value. So I welcome everybody back once again. Now that we have decoded blockchains, we have seen how digital decentralized systems agree. And today we ask the question that crashes more WhatsApp groups than politics. Why does a digital token, something you literally cannot touch, have value? If you thought the answer was because the numbers go up, well, congratulations, you are Web 2 educated and Web 3 confused. Value stops being physical and starts becoming mathematical. You see, before crypto, value was always something you could threaten people with. Land, cattle, gold, 17th century Dutch tulips, or more recently, screenshots of bank balances. But tokens broke that pattern. A token's value isn't physical. It's designed, engineered, and structured like a monetary organism. And today we are dissecting it. Don't worry, there won't be any blood, only charts, incentives, and light existential despair. Tokenomics is equals to economics plus game theory plus cryptography plus human greed. Tokenomics is basically four ingredients: mathematics, cryptography, economic incentives. Fourth one, the eternal human desire to be early in something other people don't understand. Understand, the whole industry is based on four ingredients. We are talking about the whole Web3 industry. These four basic things they include the whole industry. That is mathematics, cryptography, economic incentives, and the human desire to be early in something other people don't understand. These four things have created the whole industry that we are living in. These four creates a digital economy that somehow behaves more predictably than real world economics run by governments. This is what happens when math replaces politics. The first layer of value, let's understand slowly the assets about value, how the value is there in assets. The first layer of value, scarcity without manipulation. If there are 21 million bitcoins, then there are exactly 21 million bitcoins. There cannot be 22 million bitcoins. Even if you own all 21 million bitcoin, you cannot say that you cannot create more bitcoins. There is a mechanism which is called scarcity. That it is limited, it is scarce, it is fixed in number. Unlike gold, which is abundant, which can be many, more in one place, small in some place, and which is abundant, which has no calculated number, finite economics. In the old world, scarcity was created by natural limits or central banks pretending to have empathy. But in today's world, in cryptocurrencies, the scarcity is created by utility. The first layer of value is scarcity. Then in tokens, scarcity is mathematically guaranteed. Fixed supply and predictable insurance issuance. And then it also has transparent burn rates. Halvings coded into existence. So with every 4 year cycle, I will take example of Bitcoin and BTCC now. With every 4 year halving of the blockchain, the supply that is getting into the mining every single day, every single blocks becomes half. That's when you understand, you realize the efforts that you put to mine a coin or token is same, but the supply you get becomes half and the value goes up. That's why you see Bitcoin at $91,000 right now. That's how you see BTCC at more than $100 right now. And this is the reason why you will see BTCC at more than $10,000 in future. And I'm not talking about 10 years from now, 20 years from now. I'm talking about couple of years from now. And there is no surprise inflation in crypto. There is no emergency decisions in crypto. We printed 900 billion because we felt like it. If there is fixed supply of BTCC 21 million, it will always be 21 million. There will be no increase, no less than that. Just code, cold, honest code. Let's understand the second layer. What can the token actually do? And here is where it gets fun. A token's value skyrockets not because people believe in it, but because people need it. Utilities like paying gas fees, running smart contracts, accessing networks, earning rewards, staking, governance, central collateralizing loans, or in some cases, buying profile picture monkeys. When utility meets scarcity, the value isn't created, it's inevitable. So when utility meets scarcity, value is not created, it becomes inevitable. Look at the utility of BTCC with scarcity. You will realize this after 15th of December when BTCC will start to get logged for 1 year, 2 year long period, and there will be huge scarcity of BTCC in the whole ecosystem because everybody wants long-term income and that is consistent and stable. So these factors, they create value in crypto assets. Look how simple it is. We are just talking like a story and we are understanding so complex things. Now let's understand the third layer, the network effect, the digital domino effect. Tokens become more valuable when people join the ecosystem. More users, more demand. More demand, more activity. More activity, more utility. More utility, more value. More value, more users. It's just like circle of karma. Starts with the users and accelerates with the users. That's why I tell everybody to continue to strive to recruit more and more people. Because the number of people who will join our workforce, the number of people who will join our ecosystem will bring value to us. Each and every single member, 430 people sitting in this room, Zoom, sitting here, are creating value together. In this Zoom meeting, if 430 people are there, one more person will join. See, one more person joined. 431. So one person has brought more value now. Now there are 432 people. If there will be one more person, 433, then it will increase more value. The new member will bring more value to our ecosystem. This is how the third layer, the network effect, it creates value in the ecosystem. It brings value in the assets, digital assets. It's the same reason why social media platform is addictive. But this time the addiction is backed by cryptographic incentives. You join the node, you buy a miner, you start mining BTCC, you get incentivized for mining BTCC. And the moment you start mining BTCC, someone else who is mining BTCC already gets less BTCC every single second. Every single miner who is mining right now, the moment one new miner enters into the whole mining grid, the lesser number of BTCC is distributed amongst all. So the network effect creates huge value in the digital assets. So with every member that you bring into the ecosystem, you bring value to the ecosystem. This is the whole circle of the tokenomics and asset ecosystem. If we understand this as a leader, as a growing catalyst of the community, if we understand this as the important member, as a family member of this ecosystem, then we will understand the whole value of our business. And if all the leaders work with this spirit, then the ecosystem will become inevitable.
You.
It will become undestroyable. It will become the strongest ecosystem, stronger than the banks, stronger than the consensus of the governments. That's what Bitcoin did in this industry. This is the reason why government is scared of Bitcoin. It brutally rejects, it brutally dissents the centralization. Bitcoin brings freedom. And how you can bring freedom into your lives, your ecosystem, our ecosystem by understanding these simple words. Okay. Let's understand the fourth layer that is very, very important. The incentive design, human behavior but measured. Along with scarcity, along with the network, along with the utility, there is very essential element that is called the incentive, where people come to learn to earn. You are motivated to bring more users because there are incentives. With every single new member joining, you get paid. And the whole network that is above you gets paid with even one member joining. That's why I said every new member, every single new joining member brings value. And the value is backed by the incentive design of the ecosystem. And I'm very sure within next 3 to 4 months, you all will become so smart that you will all start your crypto tokens by learning in these classes. Basically, I'm revealing all the trade secrets of this industry. You all can develop, you all can build your multi-million businesses by learning in these classes.
Các bạn
These pillars are the foundations of this industry. If all of them are well aligned, then this could build a $1 billion business in a couple of months. Now let's understand the fourth layer, that is incentive design. In old finance, we hope people behave responsibly. In token economies, let's design a system where every irresponsible people strengthen the network. That is the beauty of tokenomics. In tokenomics, miners secure network because they're rewarded. That's why it becomes interest of miners. They get incentivized to protect the network. Stakers protect the consensus because they earn yield. You have deposited your Ethereum in 3FO, you have deposited your BTCC, staked your BTCC in 3FO because you earn staking yield. You are basically protecting the consensus of the whole community because you earn yield. Liquidity providers deepen markets because they earn fees. Every single liquidity provider in Bitcoin, in every blockchain, in BTCC earns fees with every transaction. Users participate because of governance power. And speculators, they speculate because they are speculators. Everyone plays a role voluntarily because incentives make it mathematically rational. You all are sitting here, you all are learning, you all are joining Zooms every single day because it's rational. It makes sense to you. It brings some incomes to you. You all continue mining BTCC, you all continue promoting 3FO because it makes sense to you.
phát triển
It's not just because you love me or you think that I'm a good person. It is the incentive which makes it mathematically rational. It becomes logical to you. Now let's understand the fifth layer of value. It's called governance. Who controls the future of the token? Everybody who holds Bitcoin does not sell Bitcoin and continues to hold Bitcoin until they don't have any forcible reason to sell. That's why everybody holds Bitcoin. That's why Bitcoin has a value. Otherwise, Bitcoin would go zero. This is not a small detail, this is the crown jewel. Governance determines the supply changes, the treasury spending, the reward system, the ecosystem upgrades, the future rules. Imagine if citizens could vote on monetary policy. Imagine inflation being something you influence, not something announced at 7 p.m. on news channels. That's tokenomics. Democracy, but finally functional. So token equals to a value, a system, not a guess. Token value is never price action, it's a formula, a living machine. So scarcity plus utility plus adoption plus incentives plus governance plus time is digital value. When these work, a token becomes an economy. When these fail, you get meme coins named after dogs, and those somehow go up too. Humans are complicated. Now let's understand the complex layer. For those who love pain, monetary policy design. Advanced tokenomics involves inflation curves, vesting schedules, liquidity engineering, reflexive feedback loops, treasury optimization. On-chain velocity models, automated counterfeition mechanics, dynamic reward balances, token sinks, and supply neutralizers. This is where tokenomics stop being interesting and becomes a full-time PhD you did not sign up for. But this is also where the magic happens. This is where real value is engineered. Let's do some research. Also, let me give you some homework for the research. Research one token on any chain and break down its utility, supply model, and incentive design. Any token, take Chainlink, take Base, take Ethereum, take Dogecoin, take Solana, take Sui, take any coin, and check does its value makes mathematical sense. Now in the second research, study a failed token and check which part collapsed first. Incentive, governance, or utility. Now the third prompt, compare tokenomics of Bitcoin versus Ethereum. Where do they fundamentally diverge? Now next prompt, find one token with negative value creation. A design that actually destroys its own economy. These tasks are not for today, these are for your rabbit hole. So as we close, what's coming tomorrow? Tomorrow is one of the most pivotal episodes in the entire crypto series. In the episode 8, we will learn about smart contracts, the code that executes trust, where we stop asking humans to behave and let code do the job instead. So you have to get ready. This is where the finance starts automating itself. So tomorrow we will learn about smart contracts.